Bitwise CIO Matt Hougan argues tokenized stocks can end the slow settlement cycle in traditional markets. The point is simple. An email does not wait until Monday, but stock settlement can still take days. For viewers tracking Bitwise CIOCs, the useful read is the pressure point, not a broad market mood. The confirmed headline centers on Bitwise and 680 million, while the first practical question is what it changes for equity traders. The second number to keep nearby is 68 trillion, because it shows the scale or timing that makes this story more than a label. That keeps the opening simple. The event is real, the consequence is specific, and the next step depends on the evidence that follows. Hougan framed tokenized shares as blockchain-based digital deeds that can support 24-hour markets and settlement measured in seconds instead of days. Tokenized stocks aim to settle much faster. The U.S. stock market is about 68 trillion. This context matters because the story is not floating on rumor alone. It has a clear status, a known actor, and a measurable anchor. The second confirmed piece is how the event connects to tokenized stocks and crypto rails, which narrows the story from general crypto noise to a concrete market or user effect. The card-level baseline uses 100,000x as the supporting signal, but the script treats that number only as far as the evidence allows. Nothing in this baseline should be stretched beyond the stated facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Tokenization can collapse a chain of custodians, banks, and intermediaries into a more direct settlement rail, reducing delays and potential fees. In plain English, blockchain rails can reduce settlement intermediaries. Stablecoin and chain activity would need to expand. That mechanism is why Bitwise CIOCs is more than a headline. It tells viewers where the pressure travels, through access, liquidity, policy, user trust, custody, or settlement depending on the story. The mechanism also explains why settlement lag and digital deeds matter more than a broad price reaction. If SEC changes position, or if SEC path appears, the mechanism gets a clearer stress test. If tokenized equities scale, stablecoins, Ethereum, Solana, custody systems, and broker infrastructure would all need far more capacity and compliance support. Brokers may face a cheaper settlement model. Ethereum and Solana could see heavier activity. The affected side is therefore not every crypto holder in the same way. It is the group closest to Bitwise, the product or market connected to tokenized stocks, and the users who must act on the changed condition. For equity traders, the practical concern is tied to 680 million. For crypto rails, the pressure usually appears through access, cost, timing, or confidence. That is why the practical consequence matters more than a generic bullish or bearish label. The current tokenized stock market is tiny beside the U.S. equity market, so the unresolved issue is whether regulation and infrastructure can scale fast enough. Regulatory approval and scale remain unresolved. Real volume beyond pilots would prove adoption. This scene is the guardrail against turning an incomplete story into a prediction. The confirmed part is the event and the supporting facts. The unresolved part is the follow-through, whether the response, approval, recovery, liquidity, policy step, or user behavior actually appears. The open item is best summarized as scale gap, and it should stay separate from SEC path until a fresh confirmation point appears. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether regulators allow broader onchain equity products, and whether real trading volume moves beyond pilot-scale tokenized stocks. Track onchain equities. Market access decides whether scale is real. For Bitwise CIOCs, the clean close is to track the signal that can change the story rather than guessing the final outcome. The path from trade to scale is the simplest way to follow the next phase without adding unsupported claims. If that signal arrives, the market or user effect becomes easier to judge. If it does not, the story remains constrained by the current confirmed evidence.